The charts support all this bear sentiment around this desk and from David Tepper earlier today on Squawk Box. Let's get the answers now from the chart master, Carter Worth of Worth Charting. Carter, what do you got?
Well, first off, I'm not sure I have the answers. I don't think anyone does, but I have my own hunches. So let's go with that. Couple charts. The first one is just the S&P with no judgments, no lines, no annotations. Now, let's put some lines and annotations in. The next iteration is the exact same chart. And what we know, and it's incontestable that on the way up, the S&P over the prior 2 years was responding and respecting that trend line, and the same thing on the way down. And so holding here for a second, the following statements, I think, are also incontestable. We're in a downtrend. Two, downtrends are characterized by counter-trend rallies. Have we had a counter-trend rally? We've had several. Where have they all failed? At the downtrend line. And so then it just is this. If the sequence is intact, and this current counter-trend rally, which has been failing now for over a week and a half, in order for the sequence to be intact, we must make a new low, definitionally. So, i.e., do we get back to the October 13th low, and do we hold, or do we undercut? My hunch is that we undercut. Final chart, let's just talk about the longer term a little bit, and we can spend a second or two on this. This is the entire 2009-2022 period, and what we know is we have our financial crisis low in '09, and interestingly, the COVID low is to the penny at the lower bound of that channel. Right now, we are sitting at the midpoint, exactly. And the question is, do we have to get into the lower half? I think so. And do we have to go all the way down to the lower bound for the third time? That lower bound comes into play at around 3,000, 3,100. That would represent a peak to trough decline of around 37%. And actually, the NASDAQ course has already done that. I think lower is the answer, and as low as, prospectively, the lower bound.
Carter, it's Tim. And so I was talking about the NASDAQ earlier, relative underperformance to the S&P today, breaking to fresh new relative lows. That's been the leadership. So you talk about where it's already led us downward. But if you think about mega cap tech, again, this is where we follow. What does today's move mean to you, again, in terms of your view?
Exactly. And if you see, I mean, Apple's so important here. Apple itself is right at its June low. And by all accounts, Apple is likely to break. So many stocks in the market broke below in October their respective June lows. Apple is yet to do it. I think it's a foregone conclusion that it will. And in principle, that's a sentiment thing, right? Forget about other big names. Apple is the big name. And there are a lot of people still holding it and believing in it. Ultimately, I do think it's lower. Maybe one thing to add, and this is maybe a good thing to end on. We are having a down year. We know this. That's it. Back-to-back down years are rare. So consider this. Since 1928, right, we've had 31 down years out of 94. So it's not as though it doesn't happen. But back-to-back down years are fairly rare. So we know 73, 74 was a back-to-back down year. We know 2000, 2001, 2002, 3 back-to-back years, but that was a dot-com boom and bust. And the only other 2 instances were also big moments, 39, 40, 41, that's World War II. And of course, then there were 4 back-to-back, 29, 30, 31, and 32, which is the Depression. So what does it take to get you back-to-back down years? It either took the Depression, it took World War II, or it took the 73, 74 bear market, which was an entirely different moment in terms of interest rates and inflation. We are now working on 1 year. I think we'll have back-to-back down years.
Wow, Carter Worth right there. Carter Worth, we appreciate it as always. Appreciate the insight. All right, let's trade this. Guy, what do you think about Carter's hunches? A lot of hunches there.
Yeah, I mean, Carter's been, if you go back and listen to him over the last year, I mean, I would say he's been 80% right in a lot of his things. And most recently, the fact that he thought yields would go lower, the dollar would go lower, you'd see maybe a bounce in equity market, then the equity market would go lower. It's playing out exactly right. He brings up Apple correctly. I mean, what people either don't realize or won't acknowledge, Apple made an all-time high literally a year ago today, about 182. Stock's down 27% since then. You know, a stock that supposedly never goes lower is in the midst of a pretty good downdraft. And I think it continues down. I mean, again, not to cast aspersions, it's a great company, but it's rich in this environment.